Okay, folks, this is Brandon from Galaxy Doc Market. Today is March 23rd, 2025. It's Sunday, approximately 9:05 a.m. as I make this video. I'm on the Pacific time as I make this video, but it is 9:05 p.m. a.m. For you guys out in the East Coast. And boy, oh boy, as we predicted, relief bounce was on its way. And I think we're still working our way to that conclusion. It will be short-lived, but there is a bull and bear battle going on. We are oversold, and these type of relief bounces are normal in the context of a bear market. All right, here's my disclaimer. Please pause it, read it, and if you agree, please move forward. And of course, my shameless plug on x.com/GalaxyDocMarket. Very active there. Any other commentaries, real-time stuff that I think are important, that I think the general public should know, that might be of interest to you is right here. I can't do that on YouTube. And once again, I thank you so much for subscribing and following me on x.com on YouTube. Please subscribe, like, and share my videos. All right, so here's the Black Swan. They're everywhere. I'm just going to focus on FOMC losing credibility. And I've always said and maintained for a long time that the mandate of the Fed of 2% inflation rate, which is totally arbitrary, total BS, and maximum employment is really bunk. And it seems to me that the Fed is really, and I've been saying this for a while, interested in creating a hyperinflationary environment because that is how you keep the debt going. That is how you transfer wealth to the elites. And that's what it seems like that they are doing. They are a unelected branch of non-government. They are a private bank that has obtained the ability to issue debt and control interest rates. And that used to be the function of the U.S. Treasury. And I think this is the cosmic battle between Trump administration and the Federal Reserve Bank. Regardless, it's becoming abundantly clear that FOMC is not really interested in controlling the inflation, and that if they are trying to control inflation for the benefit of the public, that they've lost control of all things. And, you can't print money to oblivion without anything really backing it other than debt and expect other results. And people are waking up to see this. There's still a lot of people asleep, however. All right, so what we got is only one news, and the COMEX versus LBMA, and I mentioned this in my x.com feed, and COMEX is American version of the Precious Metals Exchange run by CME, and LBMA is London, basically Metals Exchange. And what that means is that both of these guys have been very, very active in illegal, but they just let it happen because gold and silver can't rise. Rigging price fixing of gold and silver. It seems to me that COMEX is now realizing what's going on at the gold shortages at LBMA and is distancing itself by taking away the gold kilo futures, London spot gold futures, and London silver spot futures, and they will not be clearing those going forward. Okay, so it's right here. They're talking about COMEX is dissociating itself from the upcoming LBMA implosion, and that is why we are long gold and silver, both precious metals, physicals, as well as the futures. Keep an eye on this. All right, so let's look at the market technicals. A lot of you are saying, hey, look, your videos are really informative, but they're super long. So I'm going to attempt at keeping this short this time. All right, so let's see if that works out. If it doesn't, sorry, okay? I like to talk, and we'll just get this thing moving in the right direction, shall we? Okay, so excuse me for that. I have to grab my little pad here. Okay, so basically what we got is on my trusty McClellan summation index, as I said, that we would be having a relief bounce, and it basically showing that. Will we get a little further uptick up into this trend line right here? That remains to be seen. I do believe that this relief rally will probably persist at least through the first couple days of this coming trading week. Okay, so pay attention to this. We have a MACD that basically is signaling positive histogram and looking to cross over into the positive region. And that is going to cause a little bit of a price rise. I don't think it's going to be anything significant. I know the bulls and perma bulls are going to say the bottom is in, and that's kind of the noise that you will hear during the market crashes. And we really haven't crashed. We've been doing the slow grind corrective move, and I expect the same type of a small, shorter range bound moves this week, which I think will resolve by the end of this week. There's still a lot of those black swan stuff that I used to talk about. Thinking about the U.S. dollar strength. We'll go over the U.S. dollar. Looking at the 10-year yield, none of those has changed. Like I said, it's all about the Fed, and the Fed has lost credibility. But I don't know if it's done on purpose or it's because they're inept. Okay, so let's move forward. Let's go. Come on. Okay, and then the next one is 10-year yield. And like I said, 10-year yield, after the FOMC announcement, this week, it really didn't do much. In fact, you would have thought that by staying put or by saying something encouraging for the markets, that this 10-year yield, TNX measures yield, right? So all of you guys need to understand, as bond prices fall, yield rises, right? So we have... and so Fed's interest is keeping these yields lower, meaning that there's strength in the bond. Remember, Fed only cares about the 10-year yield and 10-year bonds. And after they reported their FOMC policy announcement, there was nothing really encouraging other than saying that the inflation is here to stay. And you can kind of see this cosmic battle between Trump calling for lower rates versus the Fed basically saying, hey, look, inflation's here to stay. Okay, you can kind of see what's going on. Neither of them are right. You do not want to keep artificially suppressing rates and creating hyperinflation, especially because the Trump administration is talking about cutting waste, bringing down interest rates and creating jobs and all this stuff. You can't do that by screwing around with interest rates. The interest rates are where it is. Inflation is where it is because of the stupid, reckless printing of the money. Okay, and both of them, it's just sometimes I don't know if they're both in on it or not, but that's the way I feel. But regardless, no matter what, we have this 10-year yield now threatening to break above this green line, which is ADMA, and I think when it explodes higher, we're going all the way back up into that 45, and I think that's coming this week. Okay, so pay attention to this. U.S. dollar has been weak. Okay, we had this downtrend and looking like we're hitting into this volatility range right into here, and we're looking for a little bit of a relief bounce, and I think I put that little line there. This is basically your 200 moving average, simple moving average, and I think we can pop up into that region and come back down. I think it's important to note that anything below 104.50 puts us into the stock market into a crash territory. Even if it bounces, I believe we'll pop, and then we're just going to drop and start getting into these levels. And that's when all the fireworks will start. But I do believe we're going to have a relief rally continuation, at least through the couple of days of this week. Let's look at silver. The biggest pain trade, but we are not painful in a way that it's not working. It is rising, but it's very, very slow. And really, silver is the most suppressed asset in the world. And so this is not at all surprising to me. However, what we have is a continually having pressure right above this 35 level. You get above 35, it's going to be off to the races. Okay, you're going to see some big fat bullish candles that you haven't seen in a long time. And remember what I told you about LBMA and COMEX. COMEX distancing itself from LBMA. There will be a time, and I think we're very close getting to that mark-to-market situation. Regardless, we've been kind of trading in this kind of a channel, and we have this uptrend line. We've poked above, and this week we just came right back down. Okay, I expect much of the same this week, and then Once we break above this 35 level, we're going to be moving higher. And that's kind of what we have. I do expect a little bit of a pullback, just maybe a little pressure, unless something happens on Monday or Tuesday, and then off to the races. Okay? And that's what I think is going to happen. So let's keep an eye on that. Let's go into gold. Okay, gold has hit historical all-time highs for a long time. And why is this down here? I have no idea. Okay. All right, let me just save that. And basically, gold, there's nothing wrong with the gold's movement. I mean, basically, you hit all-time highs. We hit like almost 30, I would say about 3067-ish. It's on pace to go into 3100, but we hit this pivot level, R2, resistance level, came right into the 80 EMA, and I think we'll chop around here a little bit and then move higher. Okay, we're going to at least go into this 3150, 3200 level, and I think that's where we are headed for gold. And let's look at SPY. And SPY has been under pressure, hasn't it? Okay. And the RSI is basically showing that we're going to have a relief bounce. And boy, did we get one, right? A little bit. I mean, it just basically bounced here. Now we're finding resistance to these levels. This 80 MA is acting as a resistance, but realistically, I think this week it could probably push up into the 569, possibly into this 578, 575 level, and it's going to come right down. This is really the main resistance level that we have. Okay, that's what we want to look at. Now let's look at our MACD histogram is divergent positive, and this is bullish crossover. So I think we do have a little bit of a move up higher and lower, and that's kind of what we have for this week. And so on this daily chart, that's what it has. It is bullish. But when you look at the SPY on the weekly, we continue to have this divergence, right, on the RSI, continuing to show that weakness. So any type of strength is nothing but a relief bounce that it can be shorted into. I think realistically, would it be possible for us to hit this 579, 580 level and come right back down in the ensuing weeks? Absolutely. The line in the sand really is this 551.51 level, right? Okay, so that's super important, this red dotted line, because if we lose that, then there's a vacuum right down into the 520 and then possibly into this 100-day moving average. There is a long-term trend line that may offer some support, but realistically, the target is if this crash is going to continue, this is where it's going to go. Excuse me, I'm getting over a little bit of a cold. So that's what we got. Coming week, there's Dollar Tree that's coming up, and Dollar Tree is beaten up to a pulp. And realistically, we've kind of broken down below this volatility box. And I think ahead of the earnings, it may be able to possibly after the earnings, just simply because it's so oversold that it may bounce. But I think we may be able to game, if you guys are into that kind of stuff, playing earnings, a round trip, pop into the earnings and then a drop. The consumer demand destruction is real, and it's happening. However, this stock is so beaten up and oversold that we have a bullish opportunity that we can turn around and do a round trip into the short positions. I don't think the selling is done on this stock, but it is super beaten down. We have the CCI that's basically positively divergent. Everything is positively divergent. We have stochastic that is positive. And on top of that, on the PPO ADX, we're beginning to get this mild. I know there's a lot of space here, but we're getting that crush indicator, meaning that we're probably going to see a bounce or bounce that's going to be sold into. Okay, accumulation distribution, we're at the bottom end of the channel. And in fact, there seems to be some nibbling that's taking place. And so that's why I think there's going to be a bounce. Okay, and then, but it will be short-lived. You short those rips. Okay, LULU. LULU is due. LULU and basically they're reporting earnings this week. It is basically shown since that last time I was calling for a bounce way back in July, June, and it did have it. We have a double top formation, and now we're coming right back down. I think ahead of the earnings, even if it pops, I think this is a short. Stochastics and MACD is all telling us that it is going to sell off. Okay. Yeah, and PPO-ADX is a very bearish formation. These are inverted curves, and that really signals that. Remember what I said back in June and July? I was looking at these crush indicators, which led to this immense rally that we had. Okay, so that's kind of what we have for Lulu, and then Apple, the granddaddy of all the markets, right? And Apple has taken a significant chunk of sell off. I mean, that's a big boy candle, right? And so it's not at all unreasonable for us to have this type of relief rally. RSI continues to be divergent. Okay, there's nothing really that looks bullish here. Any type of bounces, you just got to buy more time. Apple moves a lot slowly, but we got basically this our MACD histogram continuing to show negative. I mean, there's no signs slowing this down. CCI is getting into the oversold territory, but really there's no signs of any divergences or anything. And in fact, we can go all the way down to this level. So there's a lot of meat left on this Apple bones. And we pulled our trades a little bit early a couple weeks ago when we called Apple, but Apple was a phenomenal trade, and it continues to be a phenomenal trade for those of you that haven't taken it. Okay, stochastics continue to be negative, and of course, our trusty PPO-ADX downward curve. When you see these type of actions, it is a bearish formation that's taking place. Okay. Let's look at really Carvana, and Carvana is kind of my feature trade for the week. Double top, really. We have continual divergence on the RSI as it was making these tops, and found a little support. I think we may pop into that 80 EMA, maybe into this 20 SMA to the 229.96 level, and we start falling down. Okay, where does it go? I mean, this thing is so bloated, and the used car market being where it is, I mean, I think we can get all the way down into this $40 level, but it's going to take some time. So pay attention to this. Okay. Let's look really quickly into the fear and greed index. Since we went over all the technicals, we still stay in the extreme fear. We are off of that 2221 level. This is at its extreme level, contrarian indicator. However, market crashes occur in these environment of extreme fear. It doesn't occur, and we are really at the market top. Okay, last week, this is our long-term SPY trend. Okay, really unchanged. Okay, basically that means that there's more downside coming, but there may be a relief rally attempted. But like I said, we hit these top-end channel, we get these mega crashes that come, and I think we're going to get one like these coming soon. Okay. Let's look into the other ones. My super cycle this is last week's, this is this week's. Okay, I said, hey, there's going to be some relief bounce, and boy, did we get one. And I think we're going to continue to up and then start moving down. And so buy some time. I think we're going to at least bounce into the first couple of days, maybe into this whole week, possibly. I said that last week, and I think this is being proven. We want to see this cycle start turning over, and I think we hit this 200-day moving average, and I think we're going to test that area one more time and then start coming down into this area. Okay, so that we need to pay attention to that. We're right on cycle. VIX, that's why I'm saying right now, this is last week's, okay, I said it's going to be retracement is expected. I said 20.48. We blew past that, and now we're sitting on this precipice. I think we could pull all the way back into 18 to 17 because of the relief rally that's coming. My McClellan summation index, we talked about this. We basically has predicted that relief bounce, and I think it will continue. And then so we talked about the S&P 500 technical and past and present stocks. We already talked about that. Let's talk about XRP and Bitcoin. Okay, XRP is simple. Okay, I think we keep testing down into this region. Every time it goes down there, it's going to be a buying opportunity. SEC dropped their case, and so we'll see. There's a lot of suppression going on here because the banks are accumulating. However, we have this downtrend line that must be broken above. Otherwise, we're going to chop in this region. Every time it comes into here, that's where you buy things. Okay, but for me, I'm super bullish. XDC is, again, I think it's really near that bottom area. Again, when it comes into this 0.065, below 0.07, that's an accumulation range. Maybe we get one more bounce. This dotted line, that 10 cents region, is the breakout level. It's going to take some work, but still bullish. Bitcoin, again, it keeps making these lower lows, isn't it? I really do think that it has a possibility. I know I talked about this months ago that after it hit 100,000 that we could pull back to the 72,000. That's your buying point, okay? So if you don't have enough of these cryptos, these are your buying opportunities right now, okay? And you got to buy them when it doesn't seem like they're going to go anywhere. We already saw this. I'm not going to elaborate anymore. Here's the bottom line. Fed credibility is weakening. XRP SEC lawsuit is dropped. So pay attention to this. Slow grinding crash may take a breather for a week or two. And I said this last week. It's setting up for the next leg down. You got to short these rips, or you can play these. This is a tradable range to the upside. U.S. Treasuries are under pressure despite, Fed's lip service about controlling inflation and interest rates, and Trump wanting short-term interest rates. So Fed is trapped. U.S. bonds are under pressure. We already talked about that. Fed has lost credibility. They are a private for-profit bank somehow that took on the power to control interest rates and issue debt. That's the job of the Treasury, folks. But Fed is trapped. Chickens are coming home to roost. Gold hit all-time highs this week, folks. Silver has yet to break out. It needs to break that 35. Short-term pullback early this week. Buying opportunity moving higher. Once silver breaks out, I think it's going to be parabolic. I'm still looking at it going to 80. So at least above 58. Okay. Long gold, silver, VIX, XRP, and XDC. And when it pulls back, I'm not saying blindly go out. You got to do some technical analysis. You got to buy the dips. Okay. On these. Short watches, SMCI, still bearish on this. Apple, Williams Sonoma, FTX, LULU, and Carvana. LULU reports earnings this week. We are also talked about Dollar Tree. I think that's a long that can be shorted. Okay, I think it's so oversold at this point, despite the consumer demand destruction. Relief bounces ahead. Still looking for continuation for this week. Listen to what gold market is telling you. So, if you like this video, thumbs up, subscribe, share it, comment, and also follow me primarily at Galaxy.market on X.com. Follow me there. For whatever reason, I think there is some suppression going on for my views. I know I've said a lot of things that are true, but YouTube doesn't like. Censorship is real, folks. Business inquiries, you want to find out how to work with me, you got to email me here. Otherwise, let's get some alpha. Bye-bye.